So this is actually going to be a great class because I love when we have the opportunity to find out niche stuff, right?
Yeah.
If you can get through a training and said, hey, I didn't know that before. Those are my favorite trainings. I didn't know that before. I didn't know you could do that. But Eric can attest to this. A lot of times in these trainings, what they do is they give us talking points with our clients, right?
Yeah.
And we get to ironically have conversations that are going to come up because of the training that we just had. It happens quite a bit. And then I was talking to Ashley the other day, and we were talking about some situations that we have with clients. It's like, oh my gosh, we got a training coming up on that. Yeah. And then there was another conversation about like probate and death and taxes. Like, oh my gosh, next week our training's on that. And so even future connections is kind of cool on these trainings. So Jonathan and Dan, they're with Robust without the T, is the way I remember it. Yeah. I love it. So they're going to introduce themselves, tell you a little bit about their business model and stuff, and then they're going to kind of get into their trainings, who they are and how they can help you guys with your business. This is being recorded, so we can share it with our team that's not here and any agents, that might benefit from the knowledge, even our clients, right? Our SOI. They're uncertain right now. They're just like, what do I do? I don't want to trade my interest rate that I have at 3% for 7% or whatever. There's just uncertainty in the market. So pay attention. There's going to be some stuff in here that we can use for talking points. Well, I'm going to hand the clicker over here to Jonathan, and I'm going to share his screen, and then we'll just kind of rip into it.
Awesome. Okay. Yeah, sounds good. Thanks, Jeff.
Yeah.
Okay.
All right. Yeah, just real quick background. So how I found Jeff is my girlfriend is a hairdresser, cuts hair at the Great Clips up the street. She was cutting his hair, and he mentioned that he owned the real estate brokerage, and she of course had to throw a plug for me.
You got to meet my boy.
And then yeah, he mentioned to her about this whole training thing, but she didn't really connect what it was, and so I just called Jeff, and he told me, and I was like, that sounds awesome.
Well, you actually took the time to come in here in person and meet, and so I liked that. I like relationships, and that's what these kind of things are for. So it was a good move.
Yep. And then so I took that to Jonathan. He's the owner of RoBUS Mortgage, and kind of set up the opportunity and kind of passed it off to him because he's the guy with all the knowledge and the ideas. So he's going to kind of take it over from here and show you guys what he's got. So
yeah, thanks guys. Yeah, I promise I'll make this interesting. I'm going to throw in some sales psychology too, some random stuff that I did go back and watch a lot of the presentations or skim through several of them that you guys have done over the last couple of years. And so I'm trying to do something that's a little bit different than what you guys have seen maybe in the past. And at the end of the day, we're all trying to just get an extra deal or two. It's a tough market. In our world, we're expecting that you have a lot of things coming up next year. You have an election year. At some point, there could be some type of recessionary event. There's a lot of things that are going to trigger the Fed to probably start lowering rates again as soon as even Q1 next year, 2024. So in the mortgage world, I'm actually recruiting right now. I'm ramping up because we're expecting some type of mini refi boom next year in our world. And then also a lot more inventory is going to start coming on the market in real estate as soon as rates come down even a percentage point is what a lot of people are predicting. So I'm hoping next year is going to be a lot better. This is the worst year we've had in the mortgage industry since 2008. So it's been brutal, but RoBUS is done pretty good. We actually do a lot of really niche stuff. So I'll just do a real quick kind of overview. So Dan Allen's been doing it for 10 years. I used to work with him at one of my past companies. I started this company about 6 years ago, and we're very unique. We look like a big company because we're licensed in 14 states, really difficult states like Nevada, Arizona, Washington. We're a direct lender in all of those states. We average 10.5 calendar days from application to clear to close. So it's basically as fast as you can possibly go because you have 7 business days after you e-sign initial disclosures. So we're extremely fast. We run extremely low overhead. I promise you, I'm 100% owner. I have to close loans to make money. My profit margin is not enough to pay myself much of a salary. So our pricing is about as low as what you see on City Creek billboards out here in Utah. As low as you can possibly get. And then we also do a lot of really niche stuff, unique stuff. We work with a lot of high net worth individuals. We do a lot of unique properties. We just closed on a condotel in Park City, 72 acres with an airstrip in Oregon, crazy stuff like that, right? So we do all kinds of stuff, a barn dominium construction loan, I kid you not, in Georgia. We're in southeastern states and all the western states. So anyway, so I'm just gonna kind of rip through some of this stuff. When I get to some of the mortgage stuff, like when I start talking about some lot loans or some of the quote unquote stated income loans or some of the things that a lot of mortgage brokers aren't even doing or aware of or know how to do, or doing short-term rentals for DSCR type loans, feel free to stop me and ask questions. Anybody that's on this, virtually or in person. So I'm sure you guys are probably gonna have a few questions. So I'm gonna try and kind of cover the basics to kind of keep the ball rolling.
Sorry, I lost my display screen.
And I'll
Oh,
be
sorry.
watching the chat as well, so
Okay.
help us as to that's it.
Oh, cool. That's great. Yeah, thanks, Ashley. Man, you guys are organized. Because I do this same thing. I do a monthly sales meeting and I have about half my team show up, usually 7 or 8 people, and then 7 or 8 people kind of virtually like this. It's exactly what we do once a
Awesome.
month, right? And we even bring in speakers. Maybe we'll have one of you guys come in here to do one of ours.
Yeah, absolutely.
So
Ashley would like that.
I do, I love to present.
yeah, great.
So we'll come up with a plan B if that keeps happening, but
Okay.
you guys can see his slide again, the title slide.
Can you guys virtually, Eric or
Yep. we're
Ashley?
good.
Okay, cool. Okay. All right, so I'm gonna rip through some of this. So I threw in some random sales psychology. I'm realizing some of this is pretty widespread after I already did it. I was like, well, I'll just kind of go through it anyway.
Yeah, got it there for a reason, man.
Have you guys heard of the what is your why thing? It's kind of been making the rounds for it really became big about 15 years ago. In 2009, this guy did a TED talk on it, and it's kind of been making the rounds ever since. But I thought this was really cool. I sit on the board up at the University of Utah, and I try and mentor business school students. And so this is something they made us watch. But basically, if you want to sell something, whatever it is, you got to focus on what is the why, the how and the what, the features, the details, the benefits isn't as important as the why, like why. And so I'll just kind of rip through this real quick. So what is your why, right? So the Homo sapien brain, which is a more recent part of evolution, is your neocortex, and that's going to respond to like the details, the what, the how, the things like that of whatever it is you're selling. But a more ancient part of our evolution is the limbic brain, which is responsible for all your feelings like trust, loyalty, decision making, behavior. It doesn't focus on the details. It's your gut feeling, right? Like you go see a house and you get a vibe. I've bought and sold plenty of properties myself. I'm an investor. And so
that's your new mark.
all
I
right,
can tell you're gonna do that the whole time.
Oh, my bad.
So now it's on your screen, so you can
Okay.
point like
You
that.
guys are awesome. Okay, sorry about that. I wasn't paying
You're good.
attention. I was getting all
Is it
excited.
backwards though?
No, I love this kind of stuff.
Is it
Okay.
backwards on the Zoom?
No, it's perfect.
Okay.
Okay, great.
Okay.
Okay, guys.
All right.
So whenever you're selling, working with a buyer or a seller, right, in real estate, you got to focus on like what is emotionally driving people, right? So so if you're selling, helping somebody list their house, right? Why would somebody want to buy the house? What's going to emotionally drive people to buy this house? Or if they're a buyer, what are you looking for? What's your core like instinctual things that you need, So maybe you drive into a certain neighborhood, whether it's Daybreak or wherever it is, up in Olympus Cove where I live. As soon as I drove in there 18 years ago when I moved to Salt Lake, I'm like, this is where I'm going to buy a house. And it was just a gut feeling. I was like, no matter what, my goal is to buy a house in Olympus Cove someday, because I love the area. It didn't matter. I was going to buy a house regardless, right? So, anyway, so basically, just a few examples, historical examples of the why versus the what. Is the Wright brothers, this is in that TED talk that this guy does. It's an awesome TED talk. You can just Google it.
Simonson.
Yeah, but basically he uses these examples, and I love these examples. He uses the Wright brothers when they made the first airplane, were up against a lot of competitors that were much better funded to the tune of millions of dollars. This is 120 years ago, right? But they weren't driven, they weren't as passionate as these guys. The Wright brothers had a ragtag team of misfits that they didn't really have a lot of money, but they were really passionate about changing the world and creating this thing called flight. And so they would do good. These guys would work at all costs to make it happen, Whereas there was one guy that he talks about that was funded by the federal government, over $50 million. He had a big ego and he just wanted to do it for his name. And he wasn't really as passionate about it, but he had all the access to the top engineers in the world. He couldn't figure it out. But these guys who were really passionate, the Wright brothers, they figured it out, right? They were the first ones. Apple is a classic example, right? Go ahead.
I was gonna say, one interesting thing about the Wright brothers, their father was even against them.
Oh, was he? Oh,
Their
crazy.
father was a preacher and told him, if you do this, you're gonna go to hell.
Oh, wow, that's crazy.
And so they actually ran their own little bike shop to pay for all their experiments.
Wow.
And so they figured
That's
out, if we
long.
could ride on a two-wheeled sort of thing, and then they were figuring out the balance and the mechanics and with the bird and stuff. So they had, when your dad tells you you're gonna go to hell, you might as well just go for it.
Yeah, that's crazy.
Might as well just go for it.
I mean, that's your classic entrepreneurial mindset, but as realtors and loan officers, we're all kind of entrepreneurs to some extent, and you gotta constantly evolve and think, how do I attract clients? How do I, attract business? And then Apple's a great example, right? They focus on more the aesthetics. What is it like, the feel of it, just the emotional feeling you get when you hold or use an Apple product or hold an Apple, the simplicity of it, right? And just the way it looks and feels versus, the how, the why, the what, the details, the megabytes, the pixels, all that stuff. I mean, yeah, that's good. But at the end of the day, I'm a big Apple guy. Unfortunately, our software, my mortgage company doesn't work on Apple computers, or else I would use it there too. But anyway, and then, there's several other examples. TiVo, if they would have created a different marketing strategy of, saying, hey, we'll allow you to give you your life back so you're not subject to these TV commercials, right? Or whatever. If they would have created more of a passionate market strategy, they might have lasted a lot longer or penetrated the market a lot, sooner. MLK, I Have a Dream, right? He brought together hundreds of thousands of people, and it was all just tied to more his vision. There was lots of passionate, educated speakers for civil rights back in the 1960s, but just the way he did it, he tied into that limbic brain. So, okay. So I have some examples of, as a realtor, right? Here's like your classic what? These are the things you do, right? Like, host open houses, look at the school system, right? These are all the what things, right? But then how do you tie this into the why? This is just something I randomly pulled off Florida Realtors, right? I thought it was cool. It's a good little infographic. And then what is your why, right? So like focus on what's emotionally motivating people, the American dream, financially independent, a vacation home. People love that, right? Consult and advise them on the biggest financial decision, profit. And this kind of your motivation maybe as a realtor, profit off the years of whatever they're putting into the property if you're selling their house, right? Or if you're a realtor, right? Set your own hours, decide your own income, meet new people, whatever you're passionate about, right? So you got to rediscover that and focus on that, because that's a big part of what attracts people to you and how you attract more clients, more business, et cetera. Okay, so that's just a little sales psychology. I also have one at the end that's really unique. So I thought I'd start with that and then kind of sandwich in some of the mortgage stuff, some of the quote unquote boring mortgage stuff. No wonder why no one showed up for this one.
It's like be boring.
I'm gonna try and make it, I'm trying to focus on stuff. So I just did a quick bullet point list of kind of some unique stuff Feel free at any point to ask me about anything else, anything mortgage related, if you want. Dan can answer most of them as I can. I've been doing it for 22 years. And I've done a lot of niche stuff up until 2008. I did all my clients were real estate investors. So I was doing all the classic 80-20 loans and everything that you did pre-08. So I've always kind of done unique stuff. I've always done a little bit of commercial, a little construction, a little hard money, this, that, and the other. But so our company, I've always kind of focused on some really niche stuff. So here's a quick bullet point list that I'm gonna kind of rip through some of these. And then hopefully make it somewhat interesting, somewhat unique, not your typical stuff that you're average. So most of the stuff I'm gonna talk about, your typical big direct lenders, like your Intercaps, your Citywides, I don't know, just insert name here, right? Security National, I don't know, Castle and Cook. They can't do a lot of these, or they don't want to do a lot of them because they have to broker them out and they make half the money and it's twice the work. So they can do some of these for sure. A lot of your vanilla, bank statement loans or DSCR type loans, they can usually do those. But so I'm trying to kind of take it a step further into stuff that even most of your brokers aren't even aware of. And so and I'm of the abundance mindset too. So if you guys already work with the broker and they can't do some of this stuff, tell them to call me. I'll help. You know what I mean? Or obviously I'd love to help you guys. A lot of times, half my business currently actually comes from big direct lenders. I do a lot of turn down business for a lot of the big direct lenders. Yeah, go ahead, shoot.
So I have somebody that recently they were working like part-time off and on. Now they're not working really,
Okay,
but they inherited a lot of money and
they have good credit.
probably on the lower end there.
660, you think?
Yeah, probably
Okay,
660.
we do loan for
Okay,
them all day long.
okay, all right,
So-
cool.
What
Yep,
about
go ahead.
someone that's transitioning from being self-employed to maybe a W-2 income?
W2 is easy. We can just go conventional as long as it's the same line of work or similar line of work. A lot of times we can tie it together even if it's a
So
little
if they
different.
currently are self-employed, but they're working on the
W2.
transition, but they have self-employment income from the past year.
That's fine. We just go off the offer letter, or if they've already started, ideally a pay stub or two of the W2 job, and then we'll get conventional Fannie Freddie, Ginnie Mae's for your FHA, VA, USDA, your Govy loans. So yeah, all day long, we can do that.
And you definitely can do a pre-off letter, right?
Yeah, pre-approval, pre-qual, whatever you want to call it. We have several different ones, we have ones that are a little more, depending on what you want,
Okay.
So yeah, we can do those for you. And they can do purchase. I've gotten in with a big kind of group of entrepreneurs in random places around the country that were licensed in, like St. George. Somehow I got in with all these entrepreneurs down there. And so I did a bunch of cash out refinances for them on these no income loans because they just started their business, so they didn't quite have the bank statement history, right, showing all the deposits over 12 months, or they'd started, a lot of times it's they started their new business, sold another business or something, right? So there's always people looking to leverage. They don't always have the cash or want to use the cash for this kind of stuff. Rates are a little higher, right? Yeah, so rates are always gonna be a little higher for these type of loans, right? Riskier loans. It's offset with 20% down if it's a purchase. If it's a cash out refi, it's 25% equity, max 75 loan to value, right? Reserves, if it's cash out refi, you can use that as your reserves. But if it's a purchase or rate term, very rare we get rate terms, but we do them. We have people in hard money loans that we're taking from 13% down to 9%, and they're more than happy to do that. Plus the hard money guys gotta get paid off, at some point they're gonna come after you and foreclose and they don't get their money back because most of those are on 6-month or 12-month terms, which is another topic we'll talk about. But anyway, so this is just kind of a very unique loan. Very few people do it. It's done through a CDFI lender. Did I talk about that? Yeah, community development financial institutions. So that's how they get around the Dodd-Frank ability to repay. It's been around for a few years. We have a couple different investors that we send those to, and price out with, et cetera. Just some examples, like they do a lot of like doctors and attorneys too, that they work for a big firm or a hospital and they leave, but they're only 6 months out. And the wife's having another kid. And they're like, we got to get a bigger house, or they need money to start their practice. They're like, hey, I need some cash out. I have this $1 million house in Holiday, you know, that I only have $100,000 loan on, I need like 500,000 to start my practice, right, or whatever, so. So that's just an example of that. I don't want to spend too much time, so we got a lot to cover, so I'm not gonna spend 13 minutes talking about 2-1 buy downs. Because everybody knows what a 2-1 buy down is, hopefully by now. Okay, short-term rentals, Airbnb income. So this is kind of a unique thing. A lot of people do DSCR loans, right? They may not do them very well, but they do them because there's a lot that goes into DSCR. So just to take a step back, it stands for debt service coverage ratio. Some of you guys may know what it is, but basically it's just a non-QM. Non-QM stands for non-qualified mortgage. It's basically anything that Fannie and Freddie won't buy that's not conventional, essentially. So this is kind of in your non-QM type space. You know, DSCR, there's a lot that goes into those loans. There's the 1-to-1 ratio, and that's a big deal. If you're below that, a lot of lenders can't even do it, or you got to put a lot more money down, or the rate goes up a lot. You got to know what you're doing with those. You got to be able to kind of figure out what the ratio is up front, because that makes a big difference on those loans. I can't tell you how many fallouts we get from like Intercap because they couldn't figure out the ratio and they're like scrambling at the last second. You know what I mean? Like stuff like that. So DSCR is kind of a big deal, but we also do a lot of short-term rentals with these. It's kind of a cool niche. So basically they can take the so AirDNA, okay, it's a great website, .co. We have an account with them. I think you can access this type of information that's on the rentalizer screen. See how these all have lock buttons. So I'm pretty sure, I think this is free, but I paid for an account. But anyway, long story short, you can plug in any property into this system to get an idea of what the short-term rents are going to look like. And then basically we typically go off a 60% occupancy rate, they go off 80% of this revenue, divide that by 12, and a lot of times that's going to give you a lot more rental income than a long-term lease, a 12-month lease. So a lot of times that'll help you get these DSCR loans done in a market like this where rates are a little higher, it's harder to cash flow, you know, because the 1-to-1 ratio is based off your new PITI payment, principal, interest, taxes, insurance, versus the rents, right? And so 1-to-1 means, let's say you're $1,200 a month rent, $1,200 a month payment, you're 1-to-1, right? So if you're at $1,600 payment, $1,200 rent, then you're like 0.75 ratio, you're way down there, right? Below anyway, so I don't want to get too into the weeds, but we do a lot of short-term rentals. It's a kind of a cool little way to get deals done. So if you have a client that doesn't show a lot of income, they're a real estate investor, they're self-employed, they write off their income on taxes, they want to pick up some short-term rental properties, the long-term rent puts them at a low ratio, so they have to put more money down, the rate goes through the roof, they don't want to do that. So then we look at the short-term rental stuff. So you're typically capped at 80% on these. Most of your DSCR rental income type loans are capped at 85% of value or purchase price. With these, we're capped at 80, but most people can only go to 75. We have an investor that goes to 80, so it's kind of a unique thing there. Okay, so that's those. Any questions on that? Okay, I'm gonna keep going. So I just used one. Yeah, I just kind of broke down some of the numbers I was verbalizing here, but this is just kind of an example of, yeah, basically what I just said. So keep going here, and you guys will all get a copy of this. So okay. And feel free to reach out to myself or Dan with any questions down the road if you guys obviously on any of this too. Okay, 1-year self-employed bank statement loan. This is kind of a unique product because most of your non-QM lenders require 2 years self-employed in order to do a bank statement loan. We have a very unique investor that only requires 1 year self-employed. And why is this a big deal? A lot of people that start these businesses, they start cash flowing pretty quickly on some of their businesses. And so I do I've done a lot of loans for people in several of the states that we're in, where they're only 15 months of business, but they have a 12-month bank statement. Maybe the first few months aren't as good, but then it ramps up, right? The last few months are a lot better because you're just averaging deposits on these bank statement loans, right? You take the deposits and off commercial bank accounts, we can go usually to 85% as an expense ratio, which is kind of unique. Most of them are going to hit you with a 50% of deposits. So if you have 20 grand in the bank, they're only going to give you 10 grand of that towards your income. So In that, averaged over 12 months, right? So 20 grand times 12, 240,000 over the year, right? And there's a lot that goes into these bank statement type loans, like, they do, sometimes they have to source deposits. We try to minimize all that with our stuff, where we can even go off just the first page of the bank statement where it just shows the deposits, not even get into the weeds with that kind of stuff. So we have a lot of unique ways to get that, but that's just one example. Okay, moving on. Don't want to get hung up too much on some of these. So we do a lot of unique stuff. Like I get tons of referrals from other big direct lenders for, I literally just closed on this. I had 10-acre commercial on it with storage units and a freaking airstrip. I think the guy was dealing weed or something. I don't know. I'm just guessing, but he had plenty of money in the bank. He had good credit. We got the deal done. A lot of places would never touch that with a 10-foot pole. You know what I mean? So, and we got him a good rate too. I do, somehow I got in with all these horse people like Bill Gates, Steve Jobs. They all have houses in Wilmington. It's like the horse capital of the Northern Hemisphere. In the wintertime, it's a big deal down there. So somehow I got into that. We do a lot of them where it's kind of a commercial, a lot of horse trainers where they have like their business name on the front, and stables and barns and rings and barrel jumps and all that stuff. And, we still get it done as a residential property. But anyway, so these are just quick examples of kind of, all your unique stuff, your condo tells. A lot of people can do those, but can they, I guess, is really the question, right? We can, so we've done a lot of them, I guess. We have experience with a lot of this stuff. So low credit, no credit, okay, just your typical manual underwrites on FHA, VA. We do a ton of those. We quickly underwrite them. All we do is pull credit. One bureau will tell us what we need to know. We could shoot it over to our investors. Hey, can we even do this before we even waste any time on the deal? We quickly can that's another big deal. We'll pre-underwrite these because manual underwrites can drag on forever. And the last thing you want is a pre-qual that isn't properly underwritten, assuming that they're at a 590 credit and they're going to get a manual underwrite. You want to make sure you got that dialed in. And then all your typical stuff, alternative credit, or no credit scores. We help people a lot with establishing credit or fixing credit. That's a big thing we do. So a lot of those deals are great because those turn into real deals and they're loyal to you, the realtor and the loan officer down the road. So there's a lot of business you can get from those guys. You can't turn them away. You got to help them, and that's like part of my pro bono work, right? I feel like I'm helping people at the end of the day with some of this stuff, right? So like, hey, boom, boom, boom. Here's what you do. Go do this. This will change everything in your life. You don't realize how important credit is. It affects everything you do. Okay, your job, your anything. It's crazy. They pull soft pulls on credit for everything nowadays, And so it's crazy how much it affects people and they don't even realize it, Okay, and a lot of people have these little crappy collections, like a little medical one, a Comcast, a freaking T-Mobile collection. And that one collection is an anchor chain that literally drags their score down by 50 points for 7 to 10 years because they can renew some of those collections. They renew them again, and it hits them. And a lot of these we can help them get deleted. You got to get them deleted or removed. Paying them off doesn't really necessarily help unless it comes with a deletion. So that's a big deal. I cannot tell you how many times we run into that. Okay, so I'm just gonna kind of rip through some construction loans. We have a lot of construction loan products. I don't know how relevant that is on the realtor side, but sometimes it can be, because I think you still get paid the commission on the land, and then that works with. I never really have looked into that. Do you guys? I'm like, let's say they buy the land and then they're going to build a $500,000 house. Do you guys also get? You don't get a commission on that.
Well, if they're buying the land, that's one purchase, and then
Yeah.
construction loan, something different. They already own the land and then they do the construction.
But
there's one-time closed products.
right, yeah, of course, there's lots of those out there. Knack News got a great one. Alta Bank's one of my favorites locally. I can't tell you how many of those I've referred out. Recently, we've come up with a really good one-time close with one of our investors that we fund ourselves typically. So that's just a quick kind of thing on that. We just worked on a VA construction loan up in Park City that was like $3 million. We got it closed in like 23 days or something. So, that's, okay, so I don't wanna get hung up on that. I
So
don't
do you
know.
have a conventional,
Conventional.
jumbo product?
No, we do not. So that, I just said VA construction.
Right.
So conventional, we capped at 726, 200, so I don't know how much good that's gonna do you unless they're building a house in freaking Vernal, you know?
Mhm.
But, so I don't wanna focus too much on that, but you never know, yeah. Provincial ordinance, right? So, or whatever, right, Roosevelt, I don't know. Okay, we do a lot of these construction only loans, and these are great because we have a lot more flexibility on these. We can do owner builder, we just did a freaking barn dominium, you know, barn dominium like a shed, like a big steel shed where they build in, you know, like a kitchen and bedrooms into like one side of it, you know, usually it's like 2 stories.
Those are cool.
Yeah, they're kind of cool, like, it's kind of a trend these days, like, there's a whole thing on like social media, you can, you know, find all kinds of stuff on these barn dominiums, but anyway, yeah, we do, this is just kind of your unique construction stuff, these we can go jump on, it's construction only. We're at prime plus 0, it's a pretty good loan, I mean, it's a pretty good product. We can get creative on the down payment, we can cross collateralize their current house as part of the down. We can do seller carrybacks on lots as part of the down payment, but it only covers 40% of that. You know, you're typically gonna be in this range, right? On most of your, these days, nowadays, right? I mean, if sometimes you'll get these, right? But mostly you're in this range. So 25%, we can do 40% of that, which is 10%, equates to 10%. So really, they only need 50% if we can get a little creative. If they have a current house, we can just throw a second lien across on there, you know, or whatever. So we actually do, we can do a lot of these. These are kind of a cool product that like might be a little different than maybe some of your local credit unions that do construction, right? So anyway, we do, so that's one thing. Spec homes, we do, for whatever reason, I've gotten in with some builders and I do a lot of spec homes. I'm doing a lot of them in California, Sun Valley, Idaho, Colorado, all over the place. So these spec loans, I don't know how much that relates to you guys, so I won't focus too much on that. But if you have a builder that needs a loan to build a house, we can do it. And we don't focus on their income, they just have to have credit and some experience, that's kind of it, you know, so we do those. Okay, moving on, lots, this is something you guys could probably relate to occasionally, you might run into these here and there. We do offer several investors for lot loans. These are your improved lots where they have electrical, sewer, water, everything hooked up, right? The A&D is already done, acquisition and development. So that's just some of the stuff we do on those to 75 or 80, very, very comparable to your MACUs or your US banks or Alta banks, all the ones out there that do lot loans, okay? So definitely keep this in mind for that. We'll probably do you really want to work with US Bank on anything? I can promise you that. Big bank bureaucracy sucks. I used to work at a bank, started in the industry. I couldn't take it after like a year and a half, you know? But just all the red tape and the politics and just trying to get something done. That's the most frustrating thing. When I worked at a bank, I worked at Washington Mutual. This is way back in the day. But yeah, it was like 45 to 60 days to get an equity loan done. I was like, how's this even like? Anyway, so yeah, moving. Okay, I can talk about big banks for a while, but that's the beauty of us. We're small, we have low overhead. If you don't work with us, work with the damn broker because they're going to be cheaper and faster than any of your big direct lenders. They're not going to give you the marketing budget though. They're not going to buy your Zillow leads. That's the flip side of it, right? You know, you got your Intercap spending 80 grand a month with Perry Group on Zillow leads, but Zillow's going away. I mean, as far as what I've been hearing. But anyway, I'm sure they'll be the next whatever, you know, lead source. But okay, so there's that, improved lots. Okay, so you guys can kind of see that. I'll keep going. Unimproved lots, okay. So you know, your lots that don't have anything done, no electrical, no sewer, no water, just raw land out in the desert or the mountains or wherever. Okay, 50%. We have another lender, we could probably go to 65%. Usually around an 11% rate as well. So we go, I should have put that on there. We can actually go to 65% on unimproved lots. And that's, you know, I don't know, that's kind of a, maybe Mac, you can go to 75, I don't know, you know, but, okay. Hard money fix and flip, you know, I'm gonna introduce you guys to hard money lenders. I'm not looking to broker those. They're already charging 2 points. The last thing I wanna do is insert 2 more points on those deals. Plus, I've done a bunch of them. I feel like I provide more value by introducing you guys to hard money lenders. Mostly here in Utah, we have a few in California, we have a couple maybe in Florida and Texas, some of our other states. But I can definitely introduce you guys to some good hard money lenders if you need that. Okay, I'm just gonna connect you with them directly. I'm not trying to broker those. I feel like that's more of a value than me trying to insert myself into those. So that's kind of where I'm at with hard money. Keep me in mind for those. I'll introduce you to people. They do a lot of volume too. Okay, minimum credit score, blah, 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 fix and flip. Okay, fix and flip, nice little niche. We do a bunch of them. You know, just your house that's just needs to be fixed up and sold, but they don't have a prepay penalty on there. Okay, a lot of your non-QM DSCR tech loans, you have the standard loans on a 3-year prepay, and then you buy down to 2, 1 year, 0 years prepay, and it's expensive. Rates go up. You know, I sell a lot of 1 to 2 years right now in this market because you're buying at the peak rates, right? So there's a good chance you're going to refi it in a couple of years. So a lot of them I suggest, hey, do a 1 or 2 year prepay on those DSCR type loans, because you got to think about these things, right? Like, because it makes a big difference. Because those prepays suck. Nice thing about fix and flip, you don't have a prepay, and your rate's a little higher. It's not that much higher. I mean, you know, you're usually around 10-11% on a fix and flip loan. On DSCR loans, you're averaging closer to 8%. I can get them done in the 7s still, which is amazing because conventional rates are averaging in the 7s, but we do them. But I mean, fix and flips are great for that. No prepay penalty. You know, it's kind of like your flipper, right? So we do a lot of those. Keep us in mind for that, or hit me up with questions on any of those. Okay. Second mortgages. So Dan actually just closed 2 of these. We do non-QM bank statement seconds. We have several investors for those. So that's your self-employed borrower needs money to put down to buy their next Airbnb or whatever, right? So let's do a non-QM second for them because they write off all their income on taxes. Way cheaper to not pay the IRS and pay a little bit higher rate on a non-QM loan and a couple points on a non-QM loan versus paying cold hard cash and taxes to the IRS. So a lot of self-employed borrowers don't mind leveraging some of their stuff on these non-QM loans. And it's not that much higher. You're typically 1 to 2 points over conventional rates, and you are paying, it does work out to about double the closing costs because we don't get paid on the back end on non-QM loans. So you're 2 points right off the bat and then your standard third-party costs. So closing costs are a little higher, rates a little higher, but at the end of the day, way cheaper than paying Uncle Sam. Okay. And then we do all your, you know, just unique HELOCs, 85% on investment. You know, America First does those, right? This isn't a big niche for us. You know, I'd say, hey, maybe check out America First, but if you want to get it done fast, we do them in 5 days. America First is 40 days out. You need a down payment to close on the house. We'll get it done for you. It's going to be a little bit more expensive, but we'll get it done fast.
So that's the second mortgage. Do you have a HELOC on investment property product?
85% for investment.
That's a
HELOC, correct. Yeah, so it's not going to be pretty. You're probably going to need 11%, prime +3 on average, prime +2, depending on the credit, the loan to value, etc. But
annual fees?
Typically not. No. It's usually or if it is, it's a small fee. It's not. It's almost irrelevant.
And how long are they good for? Do you have to like re-up?
I mean, usually it's kind of the standard HELOC where it's typically good for 10 years and then it becomes amortized. Yeah, I mean, sometimes on investments they shorten it to maybe 5 years. You know, it just depends. It's all kind of on a case by case basis. So, but any other? Okay.
No, I'm just thinking of my own selfish reasons.
Sure. Yeah.
Yeah, I looked into them a lot. We have access to pretty much every option, like 3-year draw, 10-year, and then like just the regular.
Is the rate different depending on the draw period?
Yeah.
Yeah.
It's not like a whole bit.
Can you portfolio products and batch 5 to 10 together?
Our warehouse line is not, so as a direct lender, I fund everything on a warehouse line of credit. Okay, so currently it's down to 8 million. It fluctuates. I was at 10 million a little while ago and higher. And so we fund everything on a warehouse line of credit. We sell it to our investors in 2 to 3 days. So it funds under RoBUS Mortgage. That's how we have such quick turn times on a lot of our stuff, right? These, hell no, I'm not gonna put these on my warehouse line. That's basically what it comes down to. And my investors on our warehouse line, they're not doing these either. You know, some of these, okay, most of these, but. So, but with that being said, the lenders that we do, we broker these, right? So everything that's not on our warehouse line, we broker, okay? It's just your typical mortgage broker to a wholesale lender. And get it out of your head. I know there's huge, all the big direct lenders sell people on this. Well, they don't have control over it. They're gonna take longer. It's like, no. On the broker world, you can talk directly to underwriters. It's how good your loan officer is at the end of the day. You can move fast. There's all these misconceptions about the broker world. 2008, you know, that's what caused the crash. Anyway, okay. So broker world is taking more and more market share just because they're faster, they're cheaper, they have better technology a lot of times than even Rocket. You know, well, hell, they even broke Rocket's wholesale division is almost as big as their retail division these days, and they're brokering a ton of business to brokers. So where you have access to that same technology, but it's better because it's cheaper. They're not adding in their 2 points for overhead, marketing, all these things, right? So anyway, okay, back to let me get off my broker, whatever, soapbox. Okay, back to this. So yeah, I mean, we do a lot of, so I just closed a couple condos in Miami. I know you got some Florida people. Miami, your Fannie Freddie caps you at 75% on condos right now, as of about a year and a half ago or something. So we do a ton of those where we go to 90%, we stop at 15%, piggyback second on there. That way they can only put 10% down instead of 25% down, which is a big difference for a lot of people. So we've done a bunch of those. That's just an example of some of the seconds we get, right? Okay. So just want to make it clear to everybody, you can use HELOCs and equity loans as down payments for your home. Works great. We use that. That's a very common use of the seconds. I usually refer them out half time. Go to MacU and get one, and then let me do your first thing, right? So okay, I'm going to talk for a second about kind of a unique thing. So this is fractional sales. Okay, this is something all you guys can sell, and I'm going to briefly explain why you might be interested in this. You know, I know fractionals kind of have maybe a bad reputation, or maybe you've never even thought about it, but it's kind of a big deal. It's kind of a growing thing. These guys in particular, they're a local Utah company. There's really only 3 big companies that do it. There's Picasso, there's Ember, and there's Fraction. These guys have been around for 3 years. They rebranded to Fraction about a year ago. They happen to sublease my office space right now. So I share an office with them. So that's kind of why I'm bringing it up. But also I would have brought it up anyway, just because I know the owner of it, etc. And it's kind of a cool thing. Okay, I'll just kind of rip through some of these. So Fraction, the thing that here we don't want to read. They created these slides for me, so I should have shortened them up. But okay, so here's your problems in your current market, right? Your classic problems, right? High rates, slow down. Everybody knows that. You know, when are rates going to go down? Well, I think they're going to start going down next year, and I think it's going to be a little more dramatic than people think. But I'm also trying to be optimistic. Who knows, right? The Fed might be raising rates again in a week. So as far as we know, unlike past downturns, home prices are not falling. Okay, yeah, it's not like 2008, right? There's still tons of demand, not enough supply and demand economics, right? So guess what? Your property is going to go up because there's a shortage of over 1 million homes right now in the US that need to get built, you know? And Utah is a classic example of that. Look at all those dang apartment buildings you're throwing up, you know? It's like, there's such a huge demand. They're building those things like that. They build them. I know because one of my buddies builds them. He's the guy's probably worth like 100 million these days. But homeowners who are elected low interest rate, blah blah blah. Okay, we know that. I believe in those points. Okay, that's depressing stuff. Whatever. It's the reality of the market. Okay, so these guys are kind of unique. They'll finance 75% of the fractional. I'm just gonna kind of, it's not really on the slides, but I know all about it. So that's what sets them apart from other fractional companies. They'll finance you up to 75% with just a background check. They won't even pull credit or anything. And they're typically giving you rates, in the 7% range on those. Okay, so they finance it. They also have an investor model because they have a Series 7 license, so you can just come in as an investor. Basically, so I'll just kind of explain it real briefly. So like, here's a classic example. My buddy just sold his home using to Fraction up in Bear Lake. Cause he only uses it like 2 weeks out of the year, right? Very typical scenario, right? How often can people actually get away from their jobs, their schools, their whatever to go to their second home? Not very often unless you're independently wealthy or retired, right? And how many people are fit into that category? I mean, retirees, baby boomers, maybe, but heck, even baby boomers have a lot of stuff they're involved with in their local community. My parents are both 80 and they're like busier than they ever have been, like going, doing church stuff and this, that, and the other. They go on missions with their church all over the place and they're freaking 80 years old. They're getting good health, knock on wood, but anyway, so basically, so let's say, for example, okay, my buddy's house, let's make the math simple, 800,000, it's actually more than that, but it's a nice number. Then they sell 8 shares, 1/8 of a year is basically 6 weeks, okay? So people can finance, 75% of it. They have an ownership, an 8th ownership in it, they get all the equity upside over time. They go in, they create an LLC with the other owners. And then Fraction will manage it for you, like, manage the Airbnb, the nightly rentals. And you can rent it out 4 weeks and then have 2 weeks to stay in it, but the 4 weeks will cover your financing costs. So it basically becomes like kind of a free 2 weeks, and then you get the equity upside in the long run. You get kind of all the benefits of having a second home and all these sweet locations. They have awesome properties in Hawaii, all over the place, California, Florida. So they have some really cool properties that you can get in on, but you guys can get paid your commission. So there's several ways of looking at it on the realtor side. Is you get paid your full 3-point, standard kind of traditional 3% commission. If you bring in a client that wants to sell, they have a nice vacation home type home. I mean, heck, you could even say some of these places right here in Cottonwood Heights could be considered vacation homes. I mean, how many people Airbnb these with the Icon Pass, right? To come clutter up my beloved canyons. But I mean, at the end of the day, it could be any type of vacation home. Is what they're looking for, and you can sell it for more than what you would sell it for on the market. Through this fractional ownership, on average 16% above. And so the owner can basically keep 1/8 of it and then still make the same amount of money they would have by selling it just normal MLS, through the normal market. Okay. So it's kind of cool. They can keep 6 weeks out of the year in their house, but then get all the cash they would have made by selling it. And so you're selling 7/8 of it, right? Ownership. And then let's say it's 100,000, let's say it's 800,000, 100,000 each, right? You finance 75,000 of that. A lot of people are just bringing cash. Obviously, this is a little higher demographic than just the average Joe down the street. But it's kind of a cool thing. You guys can get paid on bringing in the properties or bringing buyers to the system, and you'll get paid points, So it's just something, hey, Mr. Joe Blow, maybe your credit's not as good, but you have some money in the bank. And hey, check this out. Maybe you just want to pick up a share of this tiny home in Moab. They have those going for like 50 grand each or something. And they're really cool. They're in a sweet location. I think that's almost rolled out. Anyway, it's just a kind of a unique niche. It's kind of a unique way to maybe get an extra deal or two or make an extra buck at the end of the day. With your second home buyers, it maybe, because think about it. I own properties where you have to spend 50 grand on furniture. If you kind of need a hot tub in certain locations, right? If you really want to attract that higher end clientele and charge a certain amount per night. So you got to freaking get a hot tub. You got to maintain that hot tub. You got to buy the flat screens, the couches, the bunk beds, the whatever, right? The pictures to hang on the wall, the potted plants. It's like, it's expensive when you try and set up your own Airbnb, and then you got to find a reliable property management company. There's so many of them out there that are just garbage. They'll run your property into the ground if you're not careful. Okay, I've been through several on my rentals. I've kind of learned my lesson the hard way. Really, the hard lesson was when I tried to manage them myself. And then I finally learned, oh my gosh, property management, no brainer. Why didn't I do this 5 years ago? But anyway, okay. So it's just a unique way. Hit us up with any questions. The guys are right next to me, you know, in our office, so. And then just your average payout on a typical fractional share, you know, because you're making 2 to 3 points, say it's 100,000, right? But a lot of times it can be a lot more than that. So, and Dan or myself can help with that. Okay, so this is I'm gonna end with a little sales psychology. I think I might hit the closest one out, a little less than an hour at this point. So, so I know this is gonna sound crazy, but so my wife did not get an epidural or any type of painkiller for when we had our 2 children. I have a 7-year-old daughter, a 10-year-old boy. And so we went to these hypnobirthing classes. I thought she was kind of crazy at the time. I was like, all right, it's your call. Everyone doing it. You know? I'll support whatever you want to do, you know. And there's kind of a big movement for more of this natural birth, like the Lamaze or whatever, Limitless, I don't know if I'm pronouncing it right, all these other things. So I actually use this every day. I learned some stuff at this hypnobirthing class like 11 years ago that I use like as part of my sales. So I just like, you know what, I thought it was cool. I'm gonna just share it real quick. But so there's several main tenets of hypnobirthing, and all it is mind control, it's psychology. That's all it is. It's training your brain to ignore the pain, relax, and go with the flow, right? So it's just changing your mental state. Well, I do this with my clients, you know, or with my potential referral partners sometimes. So I mean, with your clients, so an example on hypnobirthing, focus on positive thoughts and words, right? So don't focus on the negative, focus on the positive, right? So you got to reframe things, right? So like instead of contraction, right, when they're in labor, it's a surge or a wave, right? You reframe it into more of a positive word rather than negative. Maybe something that sounds like an engineering word that should be, you know, your contractor should be using with his Hispanic workers or something, right? You know, or they use this example, it's a release rather than the rupture of the membrane, you know, when the baby's coming out, that kind of stuff. Anyway. Okay, so in real estate, I'm sure you guys can think of a lot of examples, like focus on positive words, like, hey, let's look at the opportunity here. Hey, if you wait until summer 2024, guess what's going to happen if rates go down? The market, you're going to have 10 more competitors because demand hasn't gone away. There's no supply. Like you want to buy now, you can get seller concessions. You're not up against 10, 20 other buyers, and you can get a lower price. It's probably going to go up 50 grand by next summer if rates come down. As soon as rates come down, boom, more inventory, more competition. Prices are going to start going back up again, you know? And so, hey, focus on the opportunity. Yeah, it costs a little bit more. Can you afford to make the payment for 9 to 12 months? Because you're going to refi this thing, guaranteed. If not 9 to 12 months, 16 months from now. At some point, you're going to catch a dip in the market, you know? So, we went back to the Cincinnati Bengals. Got ourselves a Bengals, huh?
It's like, your time's up. Just kidding.
Still got 6.
Yeah, they're like, okay, dude, you're done. Computer stopped working. Sorry.
I don't know why it shut that off. Give me 1 second,
It's
guys.
like maybe it's like a timed.
No, I do this all the time. It's a new glitch just for you, Jonathan.
New glitch just for me. Special. I'm special.
Reshare the screen.
It looks like it's working on there. So I think we're good. Yeah, we're good. Okay. So,
We always need the younger generation nearby.
okay, so we're back, baby. We're Cincinnati Bengals. Okay. Let's see, hedge against inflation. Okay, so I mean, these are just some of the stuff I say. You guys can probably think of a lot of things. You could focus on positive words rather than negative words, right? Like, you know, whatever it might be. I mean, for my wife, a big deal when we bought our house up there too is the school system. Like she really liked the schools. That was a big deal. So focus on whatever the positive things are. Yeah, it costs a little bit more in Olympus Cove. Yeah, you're going to get a mid-century modern that's going to require hundreds of thousands to fix up. You know, you might even get flooding. I've been flooded 3 times. It's a whole different story I can tell you guys. But you know, in the long run, you focus on the positive stuff. You know, use more reframe stuff into positive words versus negative words, right? Okay. I just came up with stuff that some stuff I say, right? So, okay. In hypnobirthing, guided visualization is a big part of it, right? So you're trying to guide. So I had to sit there with my wife and affirmations to her. We had like soothing, whatever music she wanted that kind of put her in a meditative state, right? You're creating a whole experience. Same thing in real estate. You guys are creating an experience for these guys. You know, you're trying to like help them visualize, you know, like here's an example of birth, right? It's a flower opening, you know, you have all these external things like music or whatever to try and, you know, because some people they go in this sterile hospital room they've never been in before, and your body tenses up automatically as you're thinking of like stitches and like, you know, whatever, just pain and vomiting or whatever.
That's why they created birthing rooms.
So, yeah, exactly. Yeah, that's why there's tons of they call this, my friend's wife is, I don't know, she duelist like that. Anyway, okay. So this example of birthing, right? In real estate, create a visualization like, hey, your kids are gonna love this backyard because maybe they live in an apartment or maybe they live in a tiny house in wherever, you know, that doesn't have a yard, you know. Maybe it's one of those South Jordan homes that the builder put 10 feet apart from each other with a little 10-foot backyard with a patio and a strip of grass, right? Where they can't even like kick a soccer ball hardly or do anything, you know what I mean? So whatever it is, right? That was kind of a big deal for our house. Like I had a nice yard. You lived up in the upper avenues. I had a sweet house up there with a view over the valley, a sick deck, but it was a small house. It was on a busier road up there. I had no yard because it was on a hill, you know, it was like, I mean, the yard was kind of a big deal for me when we bought our next house. I was like, I need a yard with my kids for me, you know, or whatever it is. I mean, nice place to host parties. I wanted that too, you know. Separate rooms, right? Big deal with the pandemic. You know, you want to have a few extra rooms. Maybe your little condo downtown, you know, doesn't have a room for your parents when they come into town, and then you have your office room, and then you have kind of a playroom or whatever if you have kids, and you know, just whatever the visualization, right? So just whatever they're into, right? You kind of find out what they're into, the classic sales thing, you know, and then you cater to that. So, okay, so that's a big deal in hypnobirthing. Another big deal in hypnobirthing is the affirmations, right? And you see this so many times in all the cheesy movies, comedies about the self-help guys, you know. I think Brad Pitt, that one just sprung to mind when he's doing the gym stuff. He's like a personal trainer. Anyway, that was okay. So yeah, so this is an example in birth of affirmations. You guys can Google this. I should have put links up, but I found so many for realtors and then for buyers and sellers. So you want to constantly use these affirmations to remind them, like, put them in the right mindset, right? And then, you know, you are confident. I am confident. I'm grateful for the opportunities. I attract clients to my expertise, right? And then for buyers and sellers, right? Achieve the American dream, take charge of destiny, meet the needs and desires of your family, right? Or for sellers, I will make the changes necessary to make my home more attractive, you know, like, it's kind of a big deal, right? If you don't fix a few things, it makes a huge difference, you know, with how fast you sell, how much you sell. I'm sure you guys can relate to that. But, so I can, because I've sold a lot of houses. Sometimes it's a pain in the ass, but I'll tell you what, I'm always glad I put that 10 grand or 30 grand into it every time, because especially last fall, I sold a house, listed it in August, had to basically offer my tenants a free month of rent and then guarantee their deposit back so I could get them out of there sooner, because my freaking property manager screwed me on the lease. Because I didn't want to wait till last winter, because guess what? Prices were kind of going down in wintertime, right? So I had to get them out, then so I'd get creative with that. Then I had to freaking fix it up real quick. Then I had a meth head squatter in there for a week. You know, because the guy put the sign out in the front yard. As soon as he put the sign out in the front yard, meth head squatter guy in his 40s, normal looking dude, comes, rips the sign out, breaks through the lockbox, moves in. Neighbors think he bought the house because he kind of looked normal. He's in there smoking meth, put all this stuff up on the windows, you know. And so I had to go in there, scrub it, do the glorified duct clean. I can tell you guys all about the meth remediation stuff. I've dealt with it on 2 of my rooms now. Anyway, but it's a big deal, right? Like you gotta, sometimes it makes a big deal. So anyway, so it's all about affirmations, guiding them with visualization, positive thoughts and words. same old crap you guys have heard in any sales book, right? But I mean, it's true, like, it's kind of a big deal.
These are
So-
my slides. I gave you a new slide.
Oh, you did? Oh, sweet. Heck yeah, let's connect. Oh, nice. So then.
I go to your website.
We have a QR code too, but I forgot to put it on there. I was kind of in.
Ashley's got your back.
I have like 50
Good.
million things the last several weeks, so I can, as you can see, I basically threw this together like this morning, more or
Good.
less, so. Cause it's all I had anyway, this is all just stuff, but, cause this is what we do, right? So, but, okay, so yeah, guys, hit us up. I think we're right about an hour, so, Dan Allen's awesome. Hit up Dan Allen. I'm the owner. Feel free to hit me up, you know, if Dan needs help with stuff, I'll help him with it. But he's got most of this stuff dialed in by now. And yeah, that's all I got for you. Does anybody have anything else or?
Anybody on Zoom have any questions or comments? You can unmute yourself.
We got 4 people. Hey, was that good, guys, on Zoom? Was that somewhat entertaining? I hope I didn't waste your time. That's my
Oh,
big
that's
thing.
great.
Okay.
No, it's awesome.
Good stuff. You're getting thumbs up anyway.
Okay, thumbs up. Great. Thanks, guys.
All right, Megan, welcome back. Guys, we got a sponsor here in the office that brought us lunch, and we switched to her slide. Megan's been in here before with Patrick, and so happy to have you back. Go ahead and stick one in here. So Goosehead Insurance, again, some people think, oh, it's not one of those topics, it's not too exciting, but there's a lot of need to know stuff in there. So we do have a training that Megan and Patrick did in our YouTube archive. If you guys want to see that, they brought up a lot of really good points for our clients that we can use and connect you with them. So introduce yourself, tell us a little bit about what you do.
Hi, my name is Megan. I am an independent agent with Goosehead Insurance. We do home, auto. Most of our referrals are lender based or real estate agent based. Goosehead directly guarantees or tries to guarantee the process of buying a home, not being held up due to insurance issues. So binders, binder requests, any changes, as long as they're made within business hours, we guarantee them back within the hour. Even after business hours, Patrick and I usually try to keep up with our email and still do the binders ourselves. So that is the biggest thing. I have some cards. I'm sure the information is also on here.
On the disappearing screen. I'll get it back up. Tired.
Yeah, any questions?
Anybody have any insurance questions?
They're one of the lower priced options out there, so we use them quite a bit on pre-quals where we're cutting close on debt to income ratio.
Yeah,
So just heads up on that. They're really good. They're one of the, if you want something low price, but still decent quality.
thank you. We are a brokerage, yes, so we do all the shopping for you. We have multiple carriers. And we also have a national aggregate, so our national buying power, so our prices really are much lower or usually very competitive.
Nice.
So awesome, thank you guys.
Hey, thank you. Thank you, Jonathan, Dan. It was all really good stuff. Did you guys take some notes? I did. I can talk to you about some HELOCs. I really like the fraction I did too. That's
Yeah,
kind of
yeah, it's
a
pretty
different little
unique.
niche.
Yeah.
Right? Different
I'm
way
gonna email out a link for that. Like I have a specific link so that you go through us for it, because you get slightly better deals, service, whatever through that. So I'll send that out to you, Ashley.
That's
If you could just add that somewhere.
Super cool. The thing is other lenders might be able to do some of these programs and stuff, but some of them don't want to. It's like, so they're gonna send you somewhere else. So what a great collection of products, and thank you, Megan. So you guys on Zoom, we're gonna cut you loose unless you have any last comments, questions, anything. And we're gonna hang out here, have some lunch and network a little bit more. 5 seconds of awkward silence and okay, we're out. Hey, see you guys. Bye. Oh, over here. Bye, guys.
If only they could see the bare feet.
Yeah.
That's
Everybody knows.